Good morning, folks, and welcome to another one of my videos. I hope you are doing well. I didn't make a video yesterday morning because TradingView was experiencing outages, so I believe. Doing so would have I had to rejuggle my schedule a little bit, and doing so would have put doing so would have put me a little bit behind with my goals and my other tasks which I have to achieve. But we're back in business today. I did think that I was going to get a trade yesterday. I didn't actually manage to get one, but nevertheless, we are back today, and I'm going to break down these pairs for you now, which I have on watch. So I have Kiwi dollar, Euro Kiwi, Euro Aussie, and Euro dollar. So I'm going to break down these pairs for you now. So Kiwi dollar, I am looking at this pair because the narrative on the higher time frames, as I see it, is that we have a move down followed by this 1-2. This is just a wick, but this 1-2-3 touch move with this bullish wick which gets filled, but we near miss this area here. Then we move up to that area in the form of a 1-2-3 wave move, a 1-2-3 that taps out all the liquidity there and then pushes down aggressively. The other things that stand out is that we do have a little bit of a near miss to here, and often these near misses get filled, which is why I've got ray lines there. But you can see we've had some heavy commitment, when I drill down to the lower time frames, you'll see we've had a nice sequence of corrections as well, giving me a clue that the big players have stepped into the market and the money flow is well and truly in flow. The other clue for me is that we are likely to continue, is that we have a near miss to the downside, which, price got close to this area here but didn't quite fill it. And as I just said a moment ago, likely it's usually the case that these areas get filled, and you might think, well, what about that one up there? Well, if we're headed to the downside to take out these near misses, often it will do so before it takes out the ones to the upside. So this one here. So we may take out the low before we take out that high there. Okay, not all near misses get filled, but the majority do. The other clue why I think we're likely headed to take out this near miss is that we corrected below this significant liquidity point there. Now, if there was a lot of liquidity there, then price would have reacted more aggressively, and you can see that it didn't. It just consolidated below here, giving me a clue that there was not enough liquidity here to send price to the upside. So then I drilled down, and now I'm looking. So we're well positioned. We've had we've had this 1-2-3 move. After this move down, we've had a nice sequence of corrections, which you'll see in a moment, and we've corrected below the low. That gives me a clue that we're potentially headed to the downside. So we're nicely positioned. So now I just start analyzing the sequence. What was the sequence like on the way down? The sequence looks nice. Tight flag into a tight flags into a slightly larger flag, into a tight flag, into a larger flag, into a tight flag, into a slightly larger flag. And this is sort of the area where we would expect to see these, pretty large flags like the one we're getting at the moment, especially halfway into a range. So if we assume the range is from here to here, it's not uncommon that we'll see these larger flags about halfway down. Okay, particularly at the start of a piece of structure such as this. This is typically where we see these larger corrections. So with all that being said, what am I looking for? We had the area of value there. Notice we near missed. This is what I was talking about. We near missed, and the price, the clue that we were going to likely take out this sharp move. When there's a sharp move, it likely means there's a lot of liquidity there. When we see a near miss, often price moves down quite correctively. There was an element of impulsivity there, but you can see quite corrective there. A little bit of impulsive momentum, and then we corrective move down, and then we get this 1-2-3, giving me a clue that this is a potentially a completed move, a 1-2-3, which taps into the area of value, takes out all the stop losses and limit orders, and then pushes down aggressively, which is what I was anticipating and what you would have heard me say I thought was likely in yesterday's video had I actually made one. So with all that in mind, what I'll be looking for from this pair today, if we just unhide that a minute, or hide it rather, I'll be looking for we've had the push down now, and now we're starting to correct. We're getting a bit of an element of a head and shoulders pattern about this, which is a bonus. But what I'll be looking for is I'll be looking for a consolidation such as this, and then I'll be looking to get short on the break of the flag, or looking for a risk entry within it if we come up to like test the high of the flag. I think a risk entry at this moment in time would be more likely, just because of this how large this correction is becoming relative to the structure. But either or, either or is good, and then I would easily be able to manage this down to the start of the structure. I'm not concerned about this low so much, because if we do get what I'm looking for, then we likely would have tagged this is a completed piece of structure. We likely would have tagged the left shoulder. We would have created the right shoulder there. Often the right shoulder is at least equal to or higher than the left shoulder. If we get that, we likely would have formed that. So there's no reason for price to come back up. It's done what it needed to do. So therefore, I'm not too concerned about this low. And that's what I'm going to be looking for on Kiwi dollar today. I have a Google Calendar reminder to remind me to check this in an hour's time, just to see what's happened. So Euro Kiwi, that shouldn't be on the chart. I just hid that a minute ago, but it's come back for some reason. But anyway, so on the higher time frames, I'm looking at Euro Kiwi, because we have once again a 1, 2, 3, which taps into this area of liquidity. There's your near miss again. The second touch near misses this area, and then we get that. So we have this 1, 2, 3, and then we have that 1, 2, 3 middle section within this structure is parallel, and then at the end of it, this is textbook. We have this 1, 2, 3, giving me a clue that this 1, 2, 3 is finished, and that this 1, 2, 3 is potentially going to continue. However, the clue that it might not is that this correction is very wide relative to this move down, and often price can mess about when that's the case. But regardless, we have a completed piece of structure there, so there's no need for price to come all the way back up to here, because this is a completed structure and price has done what it needed to do. So therefore, what is likely happening? Well, if you look after this move down here, we have price comes down, and then we correct for a long period of time. And as I said, when price corrects sideways for a long period of time, it's often the case that these corrections become more neutral and that price will find its way back up. As I said, there's no need for price to come all the way back up here, but there is a liquidity point here, which price, if you notice there, near missed. So we got close to it. People thought it was selling off, and then it comes up. In the majority of cases, it takes out these near misses. So we have this 1, 2, 3 touch structure leading up to it. What we often see at these significant highs, as I've touched on in previous videos, is we often see price break the high before we see the moves to the downside. And one of the reasons is because of FOMO, okay? As I've said, lots of the brokerage platforms and news platforms, they start saying things like Euro Kiwi at 3-year high, which encourages people to start buying once what was previously resistance becomes support, supposedly. So they start buying the highs, okay? So you can see here that when we broke above, many people would have thought that this was a retest here, so they start getting long, and it causes a lot of confusion. And then we see a 1, 2, 3. This is what we call people being caught the wrong side of the market. We see it time and time again. So in my eyes, this is well positioned. So the first question I ask myself, is it well positioned? Yes, it's well positioned, because we're at a significant high. Price has no business going all the way back up there. This is usually buyers getting caught the wrong side of the market. Okay, so do we have a sequence of corrections to validate that theory? Yes, we do, because if you drill down to the 15-minute, you can see we have a tight correction, an impulse down. We even have an ending structure here. We have that 1, 2, 3. Then we have the tight move down, followed by tight correction into a slightly larger tight correction, into a tight correction, into this slightly larger correction. Now, this is a very large correction, which is partly why it's second on my list. So the sequence is very nice, other than the fact that we have retraced. What have we retraced now? We've retraced like 70% of the move. It's not uncommon. Most of these pairs will retrace approximately 50% of the move before they commit. I've noticed with corrective pairs such as Euro Kiwi, they do tend to retrace. This is my own observation. They do tend to retrace 60% of the move. This is retraced a little bit higher, but we have the larger correction. The sequence is pretty good. Notice here that we have this 1, 2 price taps into this area, but it doesn't commit. And when you get these sharp pullbacks like that, that's often the case that this is just a middle section. So you can see if I was to plot trend lines across this area, this has become a middle section. And I asked myself, well, what's it tapping into? Well, you can see that tight consolidation there. Price tapped into this area, we had this near miss to this area. Price scooped back up, tapped into this area again, but there wasn't enough liquidity here to send price to the downside, giving me a clue that there's liquidity above which needs to be tapped into first for price to commit to the downside. And one of the places that might be is this little area of tight consolidation there. So what I'll be looking for from this pair, we are pulling up slightly more sharply at the moment. But what I will be looking for today, I don't know why that's come on the chart. That shouldn't be there. And my forecast has completely disappeared. Okay, there's some strange things going on with... Right, there we go, right. So this is pulling up a bit more sharply. If this pulls up any more sharply, I will likely take this off of watch. But this is what I was looking for a moment ago. Of course, price action can change very quickly in trading, but what I was looking for is an impulse down followed by a tight flag, and then once again that entry on the break of the tight flag or within it. But as you can see, it's pulling up now, so we'll see what price actually does, because the thing is, if this gets too large, if we do get a correction but it becomes very large, so if we get something like this, let's say the correction becomes like that often becomes just a middle section to push up to somewhere else before we commit to the downside. Now, if that happens, where would we be tapping into? Well, you could say this area, but if we pull back this far within a range, within a impulse which started there, then it's likely the case that we're probably forming some kind of double top before we push to the downside. So we'll see how this plays out, but at the moment it's pulling back quite sharp. Regardless, I have an alert, a Google Calendar reminder set to remind me to check this one. So we'll see what happens. The next pair is Euro Aussie, and one of the reasons it might be pulling back sharp, just to touch on it, is because Euro Kiwi and Euro Aussie move in sequence with each other, and I shall explain that as we drill down. So Euro Aussie, quite a simple one. We don't have a first inflection point so much. If we just drill out, what we do have is we have this liquidity point here. So it's a similar picture. We have this 1, 2, 3, which taps into this area here. People think it's going to the moon, and it completely retraces to the downside. So very similar to Euro Kiwi. And then, so there's no business price coming all the way back up here again, but we have a liquidity point here. We have a near miss to it. And then we have this 1, 2, 3 wave move. People being caught the wrong side of the market again, just as with Euro Kiwi. And then we see, once again, we have that kind of ending structure again, and then we have that move down. The reason this is slightly lower on the list than Euro Kiwi is because we started with a larger correction. Okay, so the sequence isn't quite as good. The positioning's good, but we have an impulse down followed by a larger correction. We don't normally see that in moves that are... It does happen, moves that are going to commit to the downside. However, since then, we've had a tighter correction out of that larger correction, so the volume was built up there. So this tight correction was basically just playing the volume of this larger correction there. Then we move into a slightly larger correction, smaller correction, and then we have that larger correction again. So one of the reasons that Euro Aussie might be pulling up, Euro Kiwi might be pulling up rather, is because these two being sister pairs, Euro Aussie is trying to find liquidity from somewhere. And you can see, if I just unhide the forecast a second and put that back in its box, you can see that we kind of near missed to here. So we didn't quite reach that area. That near missed to this wick there. And both of these, including this, near missed to a sharp area, a sharp move. We had a sharp move up, a sharp move down, and all three of these near missed. So Euro Aussie might be trying to find liquidity from up here, which is why Euro Kiwi is pulling up steeply as well, because they tend to move in tandem with each other. So with that in mind, and this may not be ready by the end of the day, what I'll be looking for is a push up to this area of value, because this move down followed by the correction hasn't come from an area of value. Okay, we near missed that one, we near missed that, and we near missed that. So this has not come from an area of value for me. So what I'll be looking for is a push up to this area followed by a push back down, and then I'll be looking to get short within or on the break of a flag such as this. So last up, and being mindful of the time, I've got an alert set there. If that isn't triggered, then I don't need to check this pair. Last on the list is euro dollar. So euro dollar on the higher time frames, we are looking for a move to the upside, because we have this 1, 2, 3 touch move which taps into the line in the sand, the last area of consolidation on this overall price action. It then pushes up aggressively, and we have this impulse correction potential continuation. However, notice the series of near misses to here. So we have a bit of a near miss to here, near miss to here, and we move up to this liquidity point by way of a 1, 2, 3 touch structure, this 1, 2, 3 move. Okay, so there's potential for a move down to here before we potentially see bigger moves to the upside. Okay, so this is kind of a short-term move on the higher time frames, but we tap into this area there. We get people caught the wrong side of the market, and then we push down. So just looking to take out these near misses here. One of the clues that we were likely to push down was the fact that the last leg had a 1, 2, 3 move there. When trend lines don't marry up perfectly with the liquidity point, that often confuses people. Price breaks out and it breaks back in. So we have a sequence here. The sequence isn't quite as good, which is partly why it's last on the list. It's not as direct. You can see we move into this tight correction, which moves into a larger correction, into a slightly smaller one, into a larger one, into a smaller one, into a larger one, into a smaller one. So from a sequence point of view, that looks good. But the reason this is last on the list is because the move overall, you can see, hasn't been quite as direct. Okay, it's not like a tight flag and then we get a solid impulse down which corrects below the previous structure. This is kind of a corrective, what we call a corrective wave. So I'm not too concerned about, we didn't commit here. We were looking for entries in this area and then price scoot back up. I'm not too concerned about that, because if you look at the nature of what price has done throughout, it's pushed down. We've had this tighter consolidation, then we've scoot back up and then drop. So price will often repeat itself. So when I see a tighter correction like this and price scoot back up, that doesn't concern me, because it's in keeping with the sequence of how price has moved so far. So you can see here price tapped into this area. It didn't commit, but the reason I think that this didn't commit so far, at least, is possibly, and I say possibly because this was Asian session. This price action was during the Asian session, and of course this is euro dollar, which tends to move during the London and the New York session. So I just see this as a bit of low momentum, low liquidity, just because it was happened during the Asian session. So, but we've done what we needed to do now. We've tapped into that area. So what are we looking for today is the following. If we get a solid impulse down, and we would likely consolidate somewhere where this correction started here and get that kind of head and shoulders feel to it to some extent, I'll be looking for an impulse down followed by tight flag, and then I would be looking to get short once again with an entry either on the break of the flag or within the flag. And I've set an alert just a little bit further down to see if we get that impulse down. I want to clear this area so that it's not part of something else. I want to clear this area here. Solid impulse down followed by a flag, and that's what I'm going to be looking for today, folks. I hope you've enjoyed this video. I hope it's provided you with some value. Thanks for watching, folks, and I will be back tomorrow with another video if I've got a pair or pairs on watch.